we are almost there. So we are left only with accumulated depreciation at the end of the year, cost price at the end of the year, and carrying value at the end of the year. So we can simply calculate. We check carrying value at the beginning, that is 519,200. Remember we said when you go down, you don't change the sign. This is 0, so we don't have additions, but the 84,150 is negative, so we must subtract. So minus 84,150, and then we also subtract the depreciation, 98,890. So we'll get 336,160 as a carrying value at the end of the year. 336,160. So we have accumulated, carrying value at the end of the year. So we are left with cost price at the end as well as accumulated at the end. Now if you check there, they say we started with vehicles to the value of 814. We sold something, but we sold what? We sold one vehicle to the value of 165,000. Remember our calculation there. So at the end we'll say now we started with 814,000 minus 165. So 814,000, that is the cost price at the beginning. 814,000 minus 165. Remember 165, it was sold. That is the cost price of the sold asset. So we are left with the cost price of the vehicle at the end of the year as 649,000. 649,000. Remember we said when you have the two, then it's very easy to calculate. You can say, just simply say 649 minus 336. 336,160. Then you'll get accumulated depreciation as 312,840, but it must be in brackets, so it becomes very easy. But if you also prefer to use the ledger accounts, we can check. If we are supposed to use the ledger accounts, we're going to say this. We're going to say accumulated depreciation. It will have balance brought down there. That is what we expect. And then our balance brought down of accumulated depreciation, if you refer to the question, it's there, 294,800. So we'll have it there, 294,800. And then we also calculated accumulated depreciation there. This is accumulated depreciation of the sold asset. And then if we prepare the ledger, we'll say the asset disposal, 80,850. That is accumulated depreciation of the sold asset. With the accumulated depreciation, we also have depreciation there. And then we have calculated, we are given depreciation. If you refer to the question also, we are given depreciation as 98,890. So we can record it there, 98,890. And then if you add the two, you'll get 393,690 minus accumulate minus asset disposal. So we'll simply say there 393,690 minus 80,000. Remember 80,000 is depreciation, 850. We'll get 312,840. We'll get that figure as balance carried down. This is the end of the year. This is the beginning of the year. So if you check our question there, we also have at the beginning 294 and then at the end 312,840 as calculated from the account. But you don't have to prepare the account. If it's easy to use the ledger accounts, then you can use it. But if you can get the carrying value at the end of the year and the cost price at the end of the year, you can simply say the difference between the two. Cost price minus carrying value will definitely give you accumulated depreciation. That is the same one as there on the ledger accounts, 312,840. Even if you want to use the vehicle account, we can simply say vehicle. Remember, vehicle is an asset. It will increase there, decrease there. We'll have balance there. Balance at the beginning, it was 814,000, and then there is asset that was sold for 165,000. And then if you simply say 814 minus 165, we'll get 649,000. That is the cost price at the end of the year as calculated. So you can check it there to get it at 649. Then you simply say the cost price at the beginning 814,000 minus the cost price of the sold asset. Remember, 84,150 is not the cost price, is the disposal at carrying value. So you will have to refer back to the question and check how much is the cost price of the sold asset. It's there, so you can subtract that. If you use the ledger accounts, then it will be very easy to see this is the cost price of the sold asset, this is the cost price at the beginning of the year. Difference between the two will give us the cost price at the end of the year. So this is how our note number 3 will look like, and then we'll collect 17 marks. So we are done with the note to the financial statement. That is note number 3. And then if we move now to the income statement, there are a few things that you need to know when you prepare the income statement. Number 1, some of the skills that you need to have when you prepare the income statement. Remember, firstly, you need to know the format of the income statement, from sales up to net profit after tax. You need to know the format by heart. Now let's check, for example, other skills that you need to know. Firstly, you must identify the accounting period. We'll refer to question 3 of November 2011, but we'll only check question 3.2. It says complete the income statement for the year ended 30 June 2011. The notes to the financial statements are not required. Show workings in brackets. Now, we said the skills that you need to have there. You must be able to identify the accounting periods. Now, with accounting period, if you check, you'll be given a trial balance. You'll be given a trial balance. Date on the trial balance, we are given a date, is there. Date on the trial balance represents the end of the accounting period. That is 30 June 2011. So you must check when is the beginning. The beginning will be 1st July 2010. That will be the beginning. Now when you have the end, it becomes very easy. Remember, our accounting period must be 12 months. It means if it ended 30 June 2011, it started somewhere last year. So it becomes very easy to identify the accounting period. You just check the date on the end, the month of the end of the accounting period, the following month of last year. The following, a month after June, is July. So last year of 2011 is 2010. So it becomes very easy to identify the beginning. You'll say this is the end, then the beginning will be 1st July 2010, because you have to identify the accounting period so that you refer back every time to the accounting period. The other thing that you need to learn as a skill is how to count months when you are dealing with adjustments, because here we are dealing with adjustment. So we need to first also know how to count months. How to count months depend whether you are given the first day of the month or the last day of the month. It becomes very important to count months, otherwise you will end up counting months incorrectly and then you'll get most of the things wrong. So you must know exactly how to count. You count from the date given to the end of the accounting period, or from the beginning of the accounting period to the date given. Is the date given the first day of the month or the last day of the month? You'll see when we check the actual question, how do we apply this skill, how to count months. But it's very important to know how to count months. Another point is how to use brackets for your calculations. When you are given the income statement, you normally say, for example, if we say sales, we must open a bracket and show our calculation in the brackets. The calculation in the brackets does not include multiply or divide in the brackets. So it's very important. In the brackets, when you show your calculations in brackets, we don't need any multiply sign, any divide sign. If you have to multiply to calculate the figure, you'll have to do it separate and bring only the final answer in the brackets. You are not even going to use a divide sign inside the brackets where you calculate the amounts there. You'll see when we do the actual question, but you are not allowed to show the multiply or divide in the brackets. So it's very important. You only need the minus sign or the plus sign. And what does it? That depends. It depends on number one, is it a prepaid expense? If it was paid in advance or it was received in advance, then it will be income received in advance, or whether it was accrued, it was outstanding. So it will either be accrued income or accrued expense. So with accrued, with prepaid, it will be a minus sign, and then with accrued, it is a plus sign. It depends whether the account or the money was paid in advance, or we received more, or we did not receive at all. That is outstanding or not yet paid. So that is also important when you are doing the income statement to follow. Remember, we said you must know the format and then how to adjust to either increase or decrease the amount, and then you must identify the accounting period. You know exactly how to count months, and then you must how to use brackets for your calculations. So let's check. I said we'll refer